Hello, everyone. Welcome back to the RationalInvestor.com's Weekend Frivolity. Is that what we call it? Crypto and Stock Trading Community Show? I thought we called this the Broiler Chicken Show. Anyway, it looks like we're live, although it looks like there's a blank screen. Oh, there we go. Okay, I guess it just kicked in over there on YouTube. Am I talking? Hey, there we are. Obviously, speculators in the market right now are basically being told to cool their jets and just not do a hell of a lot. So I've been kind of like in and out, not really paying too much attention to price. Of course, I've put a whole bunch of downside objectives and downside sort of prognostications. Our algorithms are all pointing down. And if anything, fantastic. We've got this tool built. We always seem to get these tools built right at the very end of these cycles, though. So we, as you can see on the screen, we spent about, I think, basically since about 2018 developing this platform. We finally got it up and running. And it looks like it's producing some pretty good information here. In fact, actually, we had a meeting yesterday where we're going to sort of build a walkthrough tutorial on how to use the breadth indicator and all the fun stuff that you can see. This is my old volatility measures tutorial. I've just sort of been hacking away, and I'll be working on that through the week to try and give you guys a nice little video and PDF that you can use while working your way through the site. But, unfortunately with the backdrop and, you look at the breadth of the market just looks like an absolute train wreck here. So what do you do? Look at that, eh? Ugh, what a mess. It is interesting to see we have a little bit more diversification amongst the leaderboard here. Remember we had this AVEX was just leading the charge there across the board. So I think he's calmed down a little bit. Interesting how a stable coin, BUSD, I think that's a stable coin. USDT, that's a stable coin, isn't it? So interesting how two of the stable coins are actually the strongest proxies right now. And I suppose that would make sense, right? They always say cash is king in this game. And unfortunately, I think you guys are learning now, which it's a tough pill to swallow. But I think you're now learning, I sure hope you are, that no matter how much you love Bitcoin and, how much you love your cryptocurrencies, they are risk assets. And when the poop hits the fan, the risk assets come off. And interesting enough, they usually march in unison. We do have an odd situation here right now, of course, around the world, because people are causing trouble there over in Eastern Europe. And as a result, the energy price has been going zooming up here. So as a result, we got a bit of a disconnect. Classically, I would argue that commodities like oil should, if they're sort of being driven by supply and demand, then if we have a weaker economy, weaker stock market, keep in mind, the easiest way for you to actually look at all of this is just think of this as the stock market is nothing more than the most ultimate leading indicator of the economy. It really is. Don't fight this. You fight this and you just, you spend the next 5-10 years going, no way, man, no way, man, no way, man. And then eventually you go, okay, I guess I see what they're saying. Anyway, point of the matter here is it looks to me like the stock market was as bullish and as ebullient as it was going to get right into the end of last year. And of course, we've talked lots about Mr. Biden and stuff wanting to raise capital gains taxes and the socialists coming in hard. And unfortunately now we have the bankers tax kicking in here, where we have inflation coming in and destroying the purchasing power of consumers. There's no easier way to wipe out sort of consumer optimism than inject a whole bunch of inflation into the picture, where a guy's like, okay, I got $100, I can go buy a half decent dinner for the family. Then you go and oh gee whiz, that bill's now $150. So what the fuck, Am I likely to go and buy on some more computer software? Actually, one thing I noticed that was interesting in the Canadian economic data of late, they're saying that things like household furnishings are the retail sales numbers for Canada down 10%. we we historically, like when we talk economics, we're like, okay, up 1%, down 2%, up 1%, down 3%. Retail sales coming in for like, big chunky items that you're going to buy for like you're furnishing a new home or something, down 10%. And clothing, I saw clothing data coming out for Canada down 9%. I mean, big numbers. So clearly, the consumer is feeling the pain of my dear leader's socialist dream. Thank you, Klaus. Of course, Klaus doesn't give a flying fuck about Joe Sixpack. All he cares about is just maintaining his oligopoly status in the world and sort of elite society. Anyway, point of the matter here is, if we look at the stock market as the ultimate leading indicator of an economy, don't fight this. Don't fight it. M's and W's, tons of M's all over the place. And we really won't get bullish again until we actually start seeing things like weekly W's. And I hate to say it, folks, but that kind of pattern to me actually looks like a big weekly head and shoulders top. And the funny thing is we've come an awfully long way here in the stock market. This is what's so scary about this is, the banksters themselves said, and, Granny herself has said that, oh, yes, that this is not sustainable, the path that we're on. We can't just keep printing money. And yet, like you ask her, well, what do you want to do? Invest. Well, okay, we have invested. We gone and spent, and now you're actually gonna fucking rip us a new asshole, you goddamn bankers, because we listened to you and we invested, and now they're gonna bring all the prices back down to earth. Thank you very much, Granny. You sort of set us up for failure there. So, the irony of it all is that we're probably just going to trade right back down to the pre-COVID peaks on the stock market, which is exactly what the central planners want, right? They had to do something to stop this. So go throw bucket loads of money that nobody has. So in essence, shouldn't we be debating mortgaging our kids' future? Shut the fuck up. Here, the kids are going to be slaves. They don't have any choice. They jack the market up, and they, Chair Powell, a wonderful guy he is, even has said, this isn't sustainable. The economics aren't sustainable, but we don't want to talk economics while we're dealing with the sickness. So as long as they keep sort of distracting people with the sickness conversation, then they keep this silliness going here. This is not sustainable. I mean, if we change this to a percentage terms, when was the last time you saw stock markets rise 80, 90% in like 1 to 2 calendar years? I mean, come on. This is so frustrating. So the point of the matter here is, hopefully all of you, I mean, this is like in our level 1, keep it simple, stupid. They just went through technical analysis 101. What do markets in transition look like? Well, often they look like these big head and shoulders is. And especially if this is like a weekly chart, this is even worse. So I don't know whether that's our neckline. Actually, that's actually not a bad neckline right there. Boom, boom, boom. So not even much. And actually, this is pretty typical because usually a really accurate head and shoulders, the right shoulder would be lower than the left shoulder. So actually, that's not a bad drawing there. But you see, I mean, the interesting thing from a trader's perspective is I don't really like taking trades at the neckline breakdown because you should risk to the top of the head, and that's a hell of a lot of risk. But even just to move down to the 50% rule, oh, look at that. 2-to-1 risk reward. Do you think that there are professionals taking that trade in the stock market? If you are debating that maybe there aren't, and that everybody's buying, I got a bridge to sell you. How does that go? I got some swampland in Florida to sell you. If anything, this to me looks like that swampland in Florida analogy. And if anything, hate to say it, but you ever seen the movie Glengarry Glen Ross? This is actually where it gets really dangerous for people that are actually in the financial advisory business. I mean, I hope you all can see. Check this out, and let's just do a poll here. How about, hey, there's 30 people over on YouTube. What are the 3 letters that all of you should hear in your sleep that sort of tell you, okay, if we get to this area, I can actually start buying? And for like people who are really conservative, saving for retirement, 401k, RRSPs, those kind of things, this is especially significant for you people, because you don't want to be taking risk in things like 401k and retirement plans. This is money you're supposed to be investing for the long term. Nobody? Not a single person. What are the 3 letters no, that's 4. Thank you, Cole. I mean, just keep it as simple as possible. I got one guy. Well, you got to wait. And so Adam Interesting puts www. But I would actually make the argument that that's after this thing that I'm asking you for. So what is this thing that I'm asking for? The 3 letters that you got to start all conversations from this point. And as Rocker says, what are the 3 words in real estate? Maybe that'll be easier learning for you. There's Flora. Florin gets it. Excellent. Location structure MACD. Sounds to me like DMAC likes his MACD. I don't know whether I would go that order, though. That order doesn't quite make sense, DMAC, but you're close. And then 33%. So, this is Brian's crazy concept called the reload zone. And, there's the reload zone way down there. Worst part about this is actually, if you look at this is what's really shocking, is if we put a candle bar chart. Actually, this doesn't look so bad. But if I do something like, say, the ES futures, this is the S&P 500 stock futures. And then we do our reload zone. So there's my buying window down there. That's a long way down, eh? All the way down there. And the rule is we're not supposed to buy until we are at or below reload zones. So what do you do right now? Which kind of sucks. I think I told you guys before that, it's this kind of, I said just a few minutes ago, this is extremely dangerous environment, especially for like new brokers and stuff like that, because they just don't get this concept of, buying against lows, selling against highs. And, what bothers me immensely is they jack this thing up here over the past couple of years. And even the people that jack this thing up said, well, we know that this is not sustainable over time. And what that means is price at some point has to come right back down. But I think I was pointing out I'm a big fan of price gaps. Our level 2ers I think they just did price gaps. There might be one that's still partially open down there. Keep in mind, this is a weekly price chart. You really should not see price gaps on a weekly price chart. That is very bothersome. Looks like there's another gap right there. So I would imagine these levels should at some point be filled in. If we go down to a daily chart, you'll probably see them as plain as day. Back here, let's see what we got. Actually, let's put that back to our normal numbers. Gee whiz, look at that. Right at the bloody bottom, there's a gap there. Can you see that? See how there's a hole on the charts here? That great Del Moody guy who likes his taking notes of the Broiler Chicken Show. That is and this is the kick in the pants. When this gap is filled in, nobody is going to remember what the market was like way up here. I mean, look at that's way down there. And we're all going to be into, the sky's falling. We need more free money, bailouts, blah, 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 which does nothing more than just translate into a reduction of our all collective standard of living. The cool part about it, actually, ironically enough, from your guys' perspective in crypto, is you understand things like socialized losses. When FedEx was hacked, everybody pitched in and they all had their accounts reduced. When theoretically, and this is why they have things like FDIC insurance, is if you give a bank or even a brokerage house money to manage and somebody at the brokerage house fucks up and they blow up the firm or it's hacked or something like that, that's not your fault. It's the broker's fault. And the investor who deposited the money should be made whole. Not in crypto. And it's weird how when that happened in crypto, everybody actually was like, all right, socialized losses, no big deal. Like, I couldn't believe it when I heard that kind of shit. But anyway, point here is I think we're going to have socialized losses in the Canadian real estate landscape here in the next 5 to 10 years. I can see it coming. It's coming 100 miles an hour. I mean, you guys have all been burking. I'll do it again because it's almost fun to do. If you bought in the past couple years, you bought a bubble. Way to go. So, yeah, well, it is what it is. And, the worst part about it is I wanted to buy a house for Liam, and I'm looking at these prices going, this is ridiculous. I mean, if you ever see house prices go up like 25% in a year, what's the definition of a fucking blow off top? I mean, is that not the definition of a blow off top? Are house prices? A house, your home, is it supposed to actually change in value by 25% in 1 year? Come on, this is ridiculous. But it's the same thing as dog money. When I was barking to you guys about dog money a year or so ago, just going, this is absolutely ridiculous. There were people that looked at me with a straight face saying, Brian, you are wrong. Wrong, 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 wrong. I love to remind everybody. And the sad part about it is when this eventually does unwind and it turns into a train wreck and it's a mess, and then I come out and go, told you so. Oh man, the public hates when I do that. So anyway, I guess the point here, gaps, and interesting, this was the weekly gap level. I noticed that there's a gap on the daily charts right there, and that is, I think, our 78.6 area, isn't it? Yeah. So 28,000, I guess that's 2,800. Jesus. I actually want a really cool reference piece. Great Moody. I'm sure you already have this in your notes, but anybody else who's taking notes, you want to know the easiest way to figure out where a stock market will correct to when a correction is officially on. All you do is take that high right there. Boom. What is that? 47.50, 47.88. 47.91. I don't know what the hell the high is here. Did it get above 4,800? Oh, there we are. What's that? 48.0825. And Mr. W.D. Gann, all he would say is take the high and divide by 2. So we could give you a really, really simple price objective. 48.08 divided by 2 sounds to me like 24.04. Really, really simple. It's almost shocking how simple this shit is. So 24.04, that would be, we'll call that Mr. Gann's magic ride, like Mr. Toad's magic ride. Correction target should be, and really it's just like I said here, high divided by 2, right? 50% rule. We can just say 50% of entire range. It's just that simple, which I know sounds odd, but do yourself a favor and just watch this. If you don't believe me now, just watch this over the next few years. And oh, gee whiz, what a coincidence. Can you see how that gap, 78.6, look how that lines up perfectly with that 2,400 area. So there's 2,700, 24. Oh, interesting. 2,400 actually takes us right back down into that original bottom. So how ironic. You guys, believe it or not, call me crazy. You might, somebody take a screenshot of this. You might very easily see that this is actually nothing more than a massive head and shoulders. When we do something like that. That wouldn't surprise me one bit. So we'll take that. We'll throw it in the lounge. Boom. And I won't throw it on YouTube, but you guys get the idea. Take a screenshot of that. Anyway, there it is. Look at this cool picture Cole put out. This is hilarious. Cole's so awesome. I love hanging out with the OGs. Look how the chickens all created this fib spiral here. Now, did they do that on purpose, or was that done by pure accident? Like, it'd be funny if the farmer actually put seed out in the form of the fib spiral, so it turns out that they're just eating the seed off of the ground. That's adorable. So fibs and chickens all in one. Thanks, Cole. You're awesome. Just FYI, everybody. What do I want to say here? The level 1 education program, that's half of the reason why I do these weekend shows. So the level 1 education program, Grim's doing like a marathon session today. Is he still going? Yeah, they're still going. So he started that about 3 hours ago. So they're just banging away. I don't know when they're going to finish, but when they do finish, hopefully somebody can throw that level 1 Q&A document, the subsequent one. And if they really want more, thanks, Steve. Steve says he will. We can speak to those questions, but wow, holy marathon. I suppose this week is a risk management module, which is an extremely important module. In fact, probably an interesting piece for you guys that would be a nice dovetail. It's sort of free information, hopefully. And I don't know, maybe put in the comments. Do you guys, you people that are not site members, but you're watching the YouTube videos, maybe you're just watching for the first time, stuff like that. Are you getting value out of this free kind of educational stuff I'm trying to just sort of give you on a piecemeal basis? Keep in mind, our education program is very, very structured. So, but as we sort of go through stuff, I like to throw stuff out here. So I'll just give you my 2 rules of investing. And, this is, geez, what year is it? I don't know whether you guys are aware, but 2022, I got my first job in the stock market in 1988. So what is that? And, that was when I was in high school and I was a runner, just basically a kid. But we used to, so funny. We were so cocky that we used to run around the office. And this was when I guess I was 18, 19 years old. And we used to run around the office going, hell, my wife isn't even born yet. That's how cocky we were. But I've been playing this game a long time. So what is it? And then through the early 90s, of course, I was at UBC doing my fun university, fighting with economics professors and pointing out them almost blowing up brokerage houses with their stupid fucking ivory tower attitudes. And actually, frankly, I lost respect for the entire university education system following that. And I just went straight into the industry and I got all my professional started, I guess, working in the industry in earnest in the early 90s. And then basically I've been working on and off, whether it be prop firms, being a broker, being financial designations in the industry. But financial planner, derivatives trader. I was a prop trader for a while. I mean, I've done just about everything in this business. And that's like 30, 40 years. Hey, that's a long time. And believe it or not, I've actually been able to distill this whole damn process into 2 simple rules. Rule number 1, use an algo approach. And of course, a lot of people hate this kind of stuff. You want to turn me into a computer? Really, ironically enough, if good investing is actually kind of boring. It's not this high octane bullshit stuff, and listening to guys like Alan. I mean, it's terrible. He is the last person in the world anybody should be listening to about investment advice. You want to speculate? Fine, go have fun with Alan and speculate. But actual like serious investing, fuck. He is like rat poison. The way that that Charlie Munger talks about Bitcoin. And the worst part about for Bitcoin is I think Bitcoin is a fantastic product. Fantastic technology. Fantastic enthusiasm. The crypto community, they're awesome. You're great people. The only problem is I would say probably 80-90% of the time Bitcoin is not investable. It just isn't. Brian, you could charge a subscription for this show alone. Hey, that's not a bad idea, Ben. Maybe I'll even consider that. So the only way that you can, and it doesn't matter whether it's the stock market or whether it's Bitcoin or whether it's a shit coin or whether it's a frozen concentrated orange juice or whether it's Alibaba stock or whatever. Point is if you actually want to make a good investment decision, you got to treat this like it's a if then else kind of scenario. If the price is at or near value, whatever the hell you use to figure out what value is, then look at the price chart and go through your TA, right? Or if the structure of the company is solid and you see insiders buying and you see that the company used to have debt and people are exchanging that old debt for stock in the company. Wow, that must mean the stock must be actually worth something. All right, that's the algorithmic approach. You got to follow that religiously, folks, or you're just setting yourself up for failure. So when you see an image like, I don't want to burst your guys' bubble because, this doesn't sell subscriptions, that's for sure. But you got to learn this. If you want to make money at this stupid game over the long term, you've got to learn this. But there's Bitcoin's cost of production. It's down here. And actually, I even read another company. They said they took something like, did anybody read that Mara quarterly report somebody posted in the lounge? And they said they took delivery. They got something like 4,000 S19G miners, whatever the fuck that is. Or maybe it's 400 of them. I don't know. Point here is that S19 is definitely industry standard now. And, we've told you about other companies like HUD. And actually, it's interesting. People were sort of conjecturing in the lounge earlier. Are institutional players going to come in and start participating in crypto and stuff like that? In fact, yeah, Jordan asked here, wonder if the pension funds will look towards crypto after they blow. I'm not quite sure what they're blowing, but nonetheless. But I just said my simple answer is if I was an institutional, if I was a pension fund, if I was a serious investor, hundreds of millions, billions, I would seriously take a look at these crypto miners. Hut Mining themselves told you that their cost of production to mine a Bitcoin is like $3,000 or $4,000 US. Hello. I mean, the irony of it all here is we're actually being extremely generous. S19s right now, we're saying the cost to produce is $7,500. And this company, that these are the kind of companies that I would invest in if I was a pension fund manager and that kind of stuff, and I wanted crypto exposure. They're telling you that their cost of production is down here. Now, this is that algo approach. And the worst part about this, and how the hell do you figure out what the hell one of these NFTs is worth? How do you figure out what the hell an Ethereum token is worth? I don't know. I honestly don't know. And I don't mean to sound like a jerk, but frankly speaking, I don't think anybody knows. And I think what ends up happening here is this. Darn, that's not what I want to show you. It's just purely all trading on momentum, and it's trading on sentiment. So when everybody thinks, hey, we're going to get rich buying crypto, well, guess which way the price goes. Everybody, here we are. If everybody starts freaking out because maybe the central planners are going to be charging you more interest on the money that you borrow, and by the way, that has a huge effect on risk takers' appetite, then that might be one of my algo reasons. But very simply here, if it could be like Bitcoin, we'll even say IE BTC is price at near or even better below cost to produce the commodity. I mean, that's a really good, simple algo approach. So that's rule number one. And, this is what we would call fundamental analysis. One easy technical way to keep you out of trouble is I just simply ask, what is the most recent range? And is price at or below reload zones of the range? This happens to be the stock market. And as I showed you with crypto there a second ago, oh, gee whiz, what a coincidence. There is our reload zone, 61.8, 78.6. And if price does come down into this area, and there's the cost of production. We don't know. Maybe the hash rate just keeps moving up, and these two start, overlapping. And if that's the cost of production, and there's the reload zone, that's fundamentals. This is technicals. What happens when you get fundamental analysis that says buy and technical analysis that says buy? What do we call that? By the way, that's what we do here at TI. That's our whole mantra. Right? We'll put the TA guys over here. And we'll put the fundamental guys here. So we'll go TA, and then we'll go FA. And our job as technicians, right? Think that algo approach. You could have a really easy algo that just simply says, if the technicians are bullish and the fundamental analysts are bullish, then that means we've got confluence, we have agreement. And that one area where everybody agrees, we call that rational analysis. And actually, what I find fascinating about this concept is, I heard guys like John Bollinger trying to use this expression to describe how he approached the market last century. Right in there, where they agree. But for some reason, and I hate to say it, the problem with this approach is, how often do you think that this actually happens? Do you think this happens all the time? Or do you think it happens very rarely? Super important question. You all need to be able to answer this. Do you think a situation where when technical analysis says buy and fundamental analysis says buy, and we have a situation where we have a rational analysis window that says, hey, you know what, this is a pretty good buy. How often does that happen? Does it happen a lot or does it happen very rarely? I will go fill my coffee up, and I would like for you all to answer that. Maybe hit the like button. There's what, 58 people over there? Can we get maybe a couple likes? And I'd like to see in the comments, I'd like to see everybody answer the question because it's an important question you need to know. I think I'm probably the only guy on YouTube that just literally gets up and walks away wow, in the middle of his broadcast. Let's see. Anybody? Hey, there's somebody that actually said something. What's his? 10% would be my guess. Yeah, that's not bad. I'd even say maybe 5%, Andre. Less than a lot. It happens often for me. Oh, that's good, Mr. Loris B. Low. Rarely, more than rare. Rare. Not very often. Rare. That's rational. 2 years. Rarely. All right. Well, at least we're getting an idea. It doesn't happen that often, folks. And the problem here is if you are in the business of marketing, is this a good approach? Does anybody know how the professional sales industry works? Hey, Grim just finished the group tutorial session. Way to go, Grim. So what you have to understand, it's paramount in this understanding, is that rational windows don't happen every day. In fact, most of the time when an investment is a good rational idea, the public isn't the slightest bit interested. It's terrible. It's like literally, I might argue that we had a rational window down here, pretty close to the cost of production, at or below reload zones. We got an absolute gift when they just fucking puked the market out there a couple of years ago through that initial COVID scare. But once we got up into here, the rational investment window is gone. You had lots of time to participate, but once it's gone, and then you got those German guys, and I heard the German guy now is out in Thailand, enjoying a very, very good life. Do you think maybe his, how do you say this? That good life is being financed because of all the people he convinced to participate and buy and do his referral links and all that crap because, oh my God, this is the best thing. This is so incredible. I can't believe this is incredible. This is the biggest thing that's happened since yesterday. What? That's the marketing machine. That guy was absolutely perfect marketing machine. Horrible investor. Horrible. And, you know, like for somebody who's trying to learn how to trade and learn investing, horrible. Horrible. This is setting you up for disaster. But oh well. Worst part about it is that when people do lose money, they actually become very insulated, or they regress internally. And ironically enough, the guys that actually pull off those big fucking marketing things, they never get held to account. And I hate that about this industry. Never get held to account. You know, where, I had it on the screen there earlier. Where is Alan? You know, Alan just took a whole shitload of money out of the market. So is Alan calling up all of the, so here's Alan's Saturday Night Live appearance and all of the people loading up on his coin into that Saturday Night Live appearance. Is he going out of his way to try and contact any of those people that bought his idea right here, thinking, hey, you know, maybe this will change my life, and, you know, Alan's a good guy and he wouldn't steer me wrong. And obviously they've been completely destroyed. Is he being held to account at all? Nope. So, all right, back to our, want to learn how to do this correctly. First thing you have to figure out is you've got to figure out some sort of algorithmic approach to this that prevents you from chasing, that prevents you from buying overinflated assets. You know, like our education program, it has a whole bunch of nifty little sort of ways to keep you out of trouble. How's the damn chart I had on here? Yeah, over here. You know, you want to use Bitcoin, fine. You know, if it's something like stocks, this is for fundamental analysis. You could go IE S&P. You'd say something like, is price, I would say at or near historical cheap PE ratios. That's a good way to keep you out of trouble in the stock market, is don't pay too much for a price earnings ratio. So I don't know, just out of curiosity, current S&P 500 PE ratio. Let's see what we got. So right now it's sitting 35.5. So you tell me, on a historic basis, I don't know whether this is current or not, but let's see what we got here. All right, so this is just an average, it looks like. Since 1950, here we are, 2 standard deviation bands. 2010, this is 6 days ago this was published. Are we at or below the bottom end of the range for PE ratios? I don't think so. It's a bit dangerous. I mean, this is a really, really simple illustration. I'm not going to overcomplicate this, but it's just one example of a PE ratio you could, or one example of a fundamental you could use to try and help you avoid like buying bubbly markets. Although I'm not doing a very good job here. I'm sure actually probably on TradingView there's a good PE ratio metric. Check this out. This will really freak you out. Is it a good idea to get overly aggressive in the market heading into one of these Chinese Olympics events? I don't think so. You know, when I was a broker, ironically enough, this was sort of the following the dot-com bust. And you can see the market was totally sanguine. And then this was the George Bush Jr.'s bull market, the oil bull market, the commodities, the metals bull market. And this whole story was China building out its economy into the 2008 Olympics. And there's the 2008 Olympics, and look what happened following the event. Kaboosh. So fast forward to today, and there is the stock market. I mean, just a shadow of its former self, but you can see we rallied smartly right off of the lows. What letter of the alphabet does that look like? You know, I would like to, it would be better if I could put, you know, actually another really good, simple fundamental is Warren Buffett's indicator. So Buffett indicator GDP, right? The stock market versus the gross domestic product of the country. Is it a good idea to buy stocks and buy the market when we're up top here? No. Answer no, 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 no. Can you wait for meltdowns where you can buy stock cheap? Well, we will see. Only time will tell. So, you know, the point here is this is following that if then else kind of thinking. This is the broader market, investing in indexes and stuff like that. Of course, I'm a big fan of investing in individual companies. And so that's where we use, fundamental models like CanSlim, the fantastic fundamental model developed by William O'Neill. And each of the letters actually stands for a specific criteria in the market. This is fundamentals. And M, of course, stands for friendly market state. So even in this fundamental model, a huge criteria of this fundamental model is you better have a bull market to be investing, or don't bother. You're wasting your time. So another good example where what we're going to do is we're going to use an algorithm to frame your behavior in the market, if then else kind of stuff. So, whether it be something, and, here we can say, we're giving you one for a commodity like Bitcoin, try and hunt at or near the cost of production. Something like a big stock index, right? We'll try and find cheap ratios, whether it be Buffett's ratio. Clearly, Mr. Buffett's like, this stock market's looking a little dangerous. Or, like I said, you want to, and this is where, stock pickers and real kick-ass analysts, right? They'll do things like, so we'll go individual, how do you spell that? Individual stocks, right? We can do things like CanSlim. My little fund portfolio, venture cap model that was taught to me by an old VSE floor broker years and years ago, VCIM, that kind of stuff. That is the algorithmic if then else. If the criteria doesn't match, don't touch it. Then, ironically enough, once you've done your fundamentals, then actually, let's say how do we do this? Let's say at end of this FA process, what should happen is you should be given a list of acceptable investment ideas, right? Maybe it's like, for example, these from about here. This was actually one of our OGs, Kevin Kavarkanator. There's a whole bunch of ideas that he's screened. This is another gentleman, Ray Z, Options Extraordinaire. These are some of his ideas that he's fundamentally screened. David O, our Head and Shoulders guru, some of his screened ideas, some other community picks that have gone through the screener. You get the idea. I mean, this is our screened universe of acceptable names that I could actually justifiably think about investing in, because we've already gone through the fundamental screener stuff. And keep in mind, they come in and they go out, and sometimes the price, what would be a good example? Mr. Saylor. I mean, when Mr. Saylor, maybe his stock was good fundamental value here, but when it goes zooming up here, you can't touch it. Or something like Mara, for example. You buy it down here when it was a totally awesome fundamental idea, but I can't buy it now. I mean, it's just way too expensive. So the point here is that you build your fundamentally acceptable list, and then at that point, that's when you want to go and start doing things like, now we get to hunt technical setups. And, especially for new people to investing, I really suggest that you concentrate on the weekly charts, the weekly time frame. So that way it keeps you honest. And the probabilities of you succeeding chasing, think of it like this isn't, so let's go weekly. If I see the market tanking here, and then all of a sudden it starts going up and down, then up, and then notice here, down, up, down, up, down, up, down, up. Okay, well, at least now I have a range I can start to work with to justify risk. And especially here, Brian and his crazy W's. There's a good looking weekly W. Ideally, of course, we'd love to see. And actually, what's interesting is when we were running our DI algo off the site a couple of years ago, this is actually when I got the huge stock market buy signal right at the beginning of 2016. Isn't that ironic? I mean, that's your weekly W that actually frames all of this. The signal came in there. And I remember when the signal came in. We used to have another guy on the site, Thomas the Bear, and he and I both got just uber insanely bullish when this happened because our little, and this is something that I'm going to be working on over the next month or two, our histogram. This is a fantastic tool. When you see both the histogram studies, both the medium term and the long term, go heavily in one direction or the other, then it's actually a pretty good long-term pivot. So it is fascinating to see how crypto right now is minus 61 on the medium term and minus 84 on the short term. So my hunch is, ironically enough, there's probably some sort of pivot in the next maybe month or two in crypto here. How ironic, eh? But anyway, so the point being that the last time I saw notice the stock market right now, S&P 500 it's not really overly bullish on the daily chart, but on the medium term, it's basically zero. It's not really long-term overbought or oversold. It's kind of just drifting mid-zone right now. So I guess the point that I would make here is ideally in our ideal scenarios when we're thinking technically, we want to try and buy when we're ridiculously oversold, which is interesting because you can see that the bond market might actually be setting up a half decent buy signal here over the next 6 months as well. And what worries me here immensely is notice how the country funds. So this is all like international equity markets. I don't know. What do you think the sentiment of investing in Chinese stocks is right now? Do you think people are super bullish about investing in Winnie the Pooh right now? I don't know. How about investing in Vladdy? Would it be a good idea to go and give Mr. Putin a whole bunch of your hard-earned savings and say, here, sir, I trust you to not steal my money? I don't know whether that would be such a good idea. And fuck, of all places, what the hell's going on with this stupid country called Canada? I thought we were supposed to be nice people up here. Canadians don't steal. And yet my government has actually gone and outright endorsed theft of citizens' money by the government. Wow, holy, horrible precedent. And this is supposed to be in one of the quote unquote free societies of this world. If that's what's going on in a free society of this world, what do you think the unfree societies are like right now? So it's fascinating how the breadth indicator here is kind of saying, it looks to me like the international equity, that's what country funds are, is you are investing in the country. Think of the S&P 500. That would be somebody in Zimbabwe looking at investing in the United States. They would look at the S&P 500 like a country fund to a certain degree. There are very specific country funds that are set up to invest in all the various different countries around the world because Americans, and frankly speaking, I don't blame them. It's actually in their best interest to invest in something like an ADR, which stands for American Depository Receipt. So theoretically, with an ADR, it's a U.S. issued, so that means it's subject to U.S. courts and U.S. laws. So you can have some trust in it. I tell you, if you don't know this now, you better write this down. And, as Hans and Franz would say, hear me now and believe me later. Point here is you cannot trust Winnie the Pooh with your money. You cannot trust your hard-earned savings with Winnie the Pooh. You cannot trust Winnie. I'm sorry, you can't. You just can't. I mean, hell, I can't even trust Justin now. And I'm supposed to be living in a Western free society. Is that a good environment for risk taking? Hey, Grimm's here. Hey, after your 3-hour marathon, I would have thought you would have been done, but he's back for more. Anyway, good to see you. You took your microphone off mute, but I still can't hear you, so I don't know whether your microphone's working or not. But that's okay, no big deal. I can see facial expressions. I know when I've said something wrong because Grim will grimace. And if I say something right, he'll nod and he'll go, yeah, that sounds about right. So anyway, point being, it is an interesting coincidence that we have. And what really bothers me here too, remember, this is supposed to be the end of a commodity cycle, believe it or not. So we have the commodities actually threatening to go overbought here on the medium term. So if we get a big push here in the commodities into the spring, because Vladdy's over there fucking wagging his dick around, saying, look at how big and strong I am. I mean, I couldn't believe it. The cocksucker's sending out videos now of them testing nuclear weapons. Fuck. Why does he have to do this? Are you actually telling me that the people of Ukraine are such a threat to the country of Russia that we got to think about using nuclear weapons to save Russia? Come on, what the hell? That's, what worries me is I think that there are people inside Russia that are actually saying, well, you know what? Based on the fact of things like the Skvolt missile, do you guys know what the Skvolt missile is? Grim, you ever heard of the Skvolt missile? There was a submarine that sank off of the Norwegian coast about 10, 15 years ago. And it was so sad, for about a week or two, the submariners were trapped in the submarine down at the bottom of the Norwegian Sea. And they were like banging on the hull of the submarine trying to get rescued. And like NATO and all that, they had all their ships and stuff around the sub, but the Russians wouldn't let any of the Westerners to the submarine to save the sailors, because the conjecture is they were testing out this new technology called a Skvolt missile, and it's a torpedo that is fired underwater, but it's enveloped in a bubble of air. So as a result, because it's has a bubble of air around it, it can actually travel at the speed of a missile going through the air. And that's the one thing about submarine warfare that's always been sort of the bugaboo, is that the torpedo can't travel that fast. So this Skvolt missile is theoretically a torpedo that can travel at Mach speed. Oh, shit. So, you drive up 2 or 3 Aquila attack subs and surround a U.S. carrier group, and you fire off like a half a dozen of these Skvolts, all going at like 1,000 miles an hour underwater. It's impossible for the American carrier not to avoid that. So anyway, there's a military. How can you tell? Brian's a slight military buff. I love talking. In fact, it's fun in our day trading room. I sit there. One of our day traders, Thomas, is a Marine, and we sit and talk military tactics and stuff. But anyway, so the point is I actually believe somebody inside Russia has told Mr. Putin that, hey, you know what? I think we can actually win a nuclear war here. Let's give it a go. I think we could take the Americans. Jesus. If anything, if these are our ending days, it was awfully nice hanging out with you. It was nice working with you, Grim. I mean, it was awfully nice getting to know you. But the good part about it is, if we all die, then I'll see you on the other side, and I can introduce all of you to JoJo, and you get to know what my inspiration for doing all of this was all about. So, oh goodness, what a world we live in, eh? How do you try and keep PMA and all of this nonsense? I don't know. Anyway, okay, so where was I? I was trying to teach you guys a little bit about my 2 rules of investing. So, what I would just simply say is, you want to try and create a universe of acceptable fundamental names to be thinking about putting your hard-earned money work. Then once you've got your universe, then you want to start applying your technical analysis. As I started off the video, one of the easiest ways for it to keep me out of trouble is I often draw these reload zones, and I can't even think about buying that until we get down into here. I'm just not allowed to. That doesn't even necessarily mean that this will bottom here. I don't know. It might not. But what I've found in my career is it's best just to wait, right? Don't chase, don't chase, don't chase. You chase, does it make sense? And this audience is relatively educated now. So hopefully when I say this next sentence, you'll go, duh. But does it not make sense that the people that don't really know what they're doing in this business, they're the ones that come out like that David Plotny guy. And they're all like, oh, yeah, making money in stock market, that's easy stuff. They're setting themselves up for disaster here. I thought it was really interesting that Jack Pack guy, and it's just me being stupid. Somebody was actually reporting on all his SPACs and how they're doing. They are just getting destroyed now. Now, I'm sure he probably sold as he was telling the public to buy, things like Allen type shit. But it's such a great analogy that the public coming in up here, you're just asking for trouble. It could get really, really ugly in here, folks. If you're doing things like CanSlim, like we said, you got to have a friendly market state or just leave this shit alone. And right now, I would say there are a number of things that are saying that this is not a friendly market state. And the very first thing that I would tell everybody is, again, doesn't sell subscriptions, but you got to just put yourself on a hurry up and wait. And I'm not allowed to buy anything until we get back down here. Now, the only way I would change that tone is I do trade one particular trend continuation trade setup that would let me start considering participating, but I have to see at least a 33% correction. So that means I need on something like the S&P, and it's interesting, our level tours, of course, they just did gap theory. So everybody should look at this chart. Keep in mind, this is a weekly price chart. So everybody should look at this and go, holy bejesus, look at that. Ouch. There's a big hole in the charts there. These holes, I don't want any OGs to answer this. Let's leave this open for just the basic YouTube user. But what's the statistical? I didn't even ask the question yet. I hope they don't see that on YouTube because I really wanted them to try and learn something here, Edward. But what's the statistical probability that price does trade down to that level and fill that gap in? And oh, by the way, it's a pretty high number. And then there's also that gap there. And then there's also this gap here. Oh, Jesus Christ, this thing's riddled with holes. So it's interesting. I could entertain the idea of getting bullish again on the market if we at least get down to this 33%, fill in that gap. I also think these gaps need filling in. And then what I have to see is I have to start seeing you guys stepping up and buying. I have to actually see evidence that the market has come down and somebody said, no, go up. And then market comes down again and somebody says, no, I said go up. Then the market comes down again. And this guy who's been continually stepping in, and it might be any one of you, I don't really care who it is, but somebody says, no, I said go up. And we get 3 higher lows to defend our trade. This is what's called I affectionately call it a bot setup. And the only reason why I call it that is because when I remember, I used to work at this prop firm, and I used to do a lot of sort of like back in like 2012, 2013. I used to come to the crypto community and talk to them as a prop trader. And so one of the things I used to religiously say is when I turn myself into a robot, I trade like a machine. And this is a really good example of that, where, if the market comes down and it starts bottoming out, I don't have a clue what's going to happen. But what this does tell me is that somebody stepped in and said, no more down here. Somebody said, no more down here. Somebody said, no more down here. In our education program, we actually teach these as institutional fingerprints. Us in the public, we're way too poor to be able to turn a market like the S&P 500. The only people that can do that are the Joey Diamonds of the world. So if you see that turn back up, it means Joey stepped up and actually started to spend some money. And then he did it again. And he did it again. Well, that's telling me Joey here, he's getting pretty darn serious about this level. So me, Joe Sixpack, I don't know what the fuck's going to happen in the future. All I'm going to do is I'm just going to basically ride his coattails and just say, look at it. If I can get this kind of W to fire, and I'll use very specific statistics, but if I can get that W to fire, then I'm just going to risk to a break of Joey's lows here. And this now becomes my risk window. And this is not so much I'm guessing where the market's going and I'm like, Mr. Market Prognosticator. All I'm saying, and keep in mind, this is the only reason why we use TA, is what we really want to try and do is identify these windows where actually our risk is pretty well defined. Where if we stepped in and we bought and we have, anecdotal evidence that tells us that we're wrong and we better get out, well, it's a relatively small risk. It's a pretty small window. And let's just say hypothetically this works. What I would actually be looking for is for a trend continuation. And keep in mind, it might come in the form of another big whack of fucking free burr money coming from Chair Bow. I mean, you don't know what the reason is that this thing's going to turn. But if it does turn and I do enter there, you see my risk window. Well, my potential reward window is all the way up here. Now, is that the kind of trade that we want to try and concentrate on? Where if I'm wrong, that's my risk. If I'm right, wow, that's my reward. That's what we want to concentrate on as quote unquote traders. So the point that I'm trying to make out all this is you can see there is, and I didn't even get into indicator analysis or anything like that, but there is a lot of work that has to be done on a market like this before I can even think about turning bullish again. And the worst part about all of this is we have quite a few reasons to not be bullish. Whether it be what usually happens in the stock market following a Chinese Olympics. That image right there scares the shit out of me. I think Winnie the Pooh is just about to pull the fucking carpet out from. You guys think you've seen rug pulls in crypto? You ain't seen nothing yet. I mean, fuck, they were doing ski hills in fucking steel mills. Did you see the pictures? And what's so funny is like the American media, they're going, thank fucking God that goddamn nightmare is over. I mean, it was just a train wreck, one thing after another after another. It was just like a comedy of errors. I don't even know why the fuck they did it. It was just so stupid. And of course, anybody actually wanting to say anything, they just, they were totally fucking kibosh. So you got China there doing its shit. And then, of course, we'll get into crypto and it's fun stuff in a bit. I'm still just talking about like sort of broader market shit. Thought it was fascinating. I don't know what, and this scares me. You see what's happening here in Hong Kong is the rate of cases is going exponential here. And what I kind of worried about and this is just me because Brian, I love to worry about shit. I wonder whether, there is a concerted effort to try and murder as many people in Hong Kong as possible. Keep it. And I even replied to somebody. I said, I totally respect your feeling. This is ugly. This is nasty shit. Right. And I respect Carol. I totally think I'm the PMA guy. I want us to all be a big, happy family. But I'll tell you, man, everything that I see out of this mafioso state, it scares the shit out of me. And I wouldn't put it past Winnie that he's basically said, we are going to blockade Hong Kong and we are going to liquidate it. That wouldn't surprise me one bit. That's sort of like, Skvolt missile kind of talk. We can sit here and we can kind of go, PMA, hugs and kisses. We'll all get along. Let's all hold hands. But at the end of the day, these humans are nasty motherfuckers. This is a terrible species. I'm actually really embarrassed. When I stand in front of God, I'm going to say, why didn't she send me as an ant? I would have had so much more fun just being an ant. Or maybe send me back as like an evolved alien species where we're not out to just all fuck each other over. Because I tell you, man, I've been on this planet now 50 years, and these humans, they are nasty motherfuckers. So, I mean, we all know what happened in Warsaw. There's no reason why China couldn't be doing exactly the same thing in Hong Kong right now. Only, and the problem here is you start even just, let's have this conversation. And then all of a sudden, all of this sort of pieces in place to make sure that we don't have these kind of conversations, that we can't have a free speech kind of society. And all of a sudden, everybody just starts jumping on you right, left, and center. When frankly speaking, I think this is the Wuhan issue of a manufactured killer sickness, I think is still very real. What I found fascinating about this is that who's the culprit here of this? Hong Kong is absolutely, COVID cases are going through the roof. And it turns out that the culprit is, of all things, I mean, how bad does this get? I don't know. But the culprit, if I can find him, is... Oh, where is it? Wait for it. Wait for it. Wait for it. This guy. So this is what gets really scary about this, is that what they're actually finding is that it's the pets that are actually spreading the COVID, not the humans. Oh, fuck me. So, I mean, how bad does this get? I don't know. And, the worst part about this, especially like in Canada, right? Because we just went through, Big Brother basically set a horrible precedent here, where basically now Big Brother has the authority to come in and just shit on you. If it feels like it, Justin can come in and just take a nice, juicy, sweet-smelling crap right on my face. And there's not anything I can do about it. So, we get another big wave of sickness. I also remember that when this originally broke back in like January of 2020, I think it was January 2020. Well, so that's what makes me think like this is concentrated. I hate to say it, but I think that there is a cull going on in Hong Kong right now. Winnie is trying to cull the population, which is shocking. But anyway, I guess what I'm trying to say is what I saw back in January, February of 2000. I think that was when it was, but it might have been 1999. I can't remember. Maybe it was 2000. There was a video that was put out from, and I think it was from Hong Kong, and they actually showed. I remember they were panning the camera across, and there was a dead body just lying in the streets. And it was this old man, and nobody even bothered to move the guy or put a blanket over him or even give him his last rites or anything. It's just a dead body sitting there on the fucking streets. So, and of course, we in the West, we don't know what the hell's going on there. And of course, Winnie, of course, is making damn sure we don't know exactly what's going on there. So I don't know how bad gets, but what I did notice is that 2 or 3 months later, all of a sudden it hit North America and Europe and all that. So be forewarned, folks, I don't think this shit is over by a long shot, which really sucks horse cocks. So if anything, they bid the market up. Granny and Chippa have come out and convinced us all to mortgage our futures. Got to get this thing up. Got to get this thing up. But what caused this? What caused that? Right? That was, oh my God, it's spreading to North America and all hell's breaking loose. That's what caused that. And we could have sat here at this time and said, well, gee whiz, there's the last bottom. Where's this thing likely to bottom? Maybe we should draw reload zones. And, maybe if we get into reload zones, we should buy. I mean, look at that. Fuck. So I hope you guys are sort of seeing the writing on the walls here. Reload zone? Reload zone? I don't know if this happens in one day or, what is this? A weekly chart. So that's like in a month or two. Boom, 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 boom. Fill in all our gaps. 91% of the time, these gaps get filled in. You know how this goes. So, and the interesting thing too is we could probably even do something simple, like just draw a trend line. Just say, well, where is the next sort of support level? I think it's right along here. So, what was the purpose of all this? Oh, yeah, to teach you guys how to invest. So, 2 rules of investing. Number 1, try and use an algorithm approach that tells you, good fundamental quality and half decent technical setup. We have no fundamental value here at all, and we have no technical setups, not even trend continuation trades, which frankly speaking, to be perfectly honest with you, I do not see this scenario playing out. I mean, it's wishful thinking, hope, pray, hope, pray, hope, pray. But I don't see this scenario playing out. What I see is I think we got to come back and do some serious reload zone action here. So from a technical perspective, woo-wee, that's a pretty damn risky market. I mean, let's just call a spade a spade. So if I was even at the point where I was like, okay, we can move on to step 2, well, then we would talk about, okay, what's Brian's second rule of investing? And this is all about risk management. And that's actually where I was supposed to be going with this whole conversation to begin with. So how long have I been blabbing away here? Jeez, God, it's about an hour or so, eh? But rule number 2 is never risk more than 5% of your stake on any one single investment idea. Just don't do it. And actually, ironically enough, this is actually the rule that ends up blowing most people up. Is even if you had, like, let's say you had like $100 portfolio and you put 5% of your money, right, $5, into $5 into the market up here, which I wouldn't like you doing anyway, but location. But even if you took 5% of your portfolio and threw it in up here, and the S&P 500 went to 0, well, all right, now you've got $95 left. Well, that's not bad. It's not the end of the world, right? So this is the whole point of why you must follow this 5% rule. Is you don't know whether your idea is going to work or not. And worst case scenario, you never want to see your portfolio lose more than $5 of that $100. And end result of this would be, okay, well, now I got $95 left. Is the S&P 500 likely to go to zero? No. Is the S&P 500 a rise-only market? Ironically enough, over time, I think yes. So you probably make money, but I would hate for you to be, a student of mine and saying, well, Brad, I went and put 5% of my portfolio in up here. I don't like that thinking at all. But should we actually get through this part? Get through this part. Check. And we get through this part. Check. Right? And this is, in essence, what we want out of here is we've already actually done the back testing, and we want actually an algo that 66% of the time produces desired results. Now, make no mistake about it. That's in the investing world, that's actually a very, very high number. Like I showed you with that risk to reward. If we did the bot and I risked $1 and I was right and the market went zooming up, I'd make like $10. Was it like a 4-to-1 risk reward? I'd make $4. So if you can be accurate like 66% of the time and your reward is $3 or $4 for every risk taken, holy Jesus, you make the account will just go ridiculous, the amount of money that you'll make over time. But the key here is you cannot lose more than $5 on any one idea. And if you get to that $5 mark, you got to have religion and say, oh, no, I'm done. I was wrong. Get me the fuck out. Interestingly enough, most people, especially quote unquote traders, they'll actually, I don't ever even want to get close to this number. I don't even want to have nightmares that I'm getting close to this number. So I am going to risk maybe 1 to 2% of my stake. And remember, 66% accuracy at like 2-3 to 1 risk reward. If I just keep doing this over and over and over, let's just do the numbers. We'll just do it nice and simple. So let's say, we'll risk 1% of our portfolio. And we're going to try and shoot for that 3 to 1 risk reward, which is a pretty damn good number. And we're going to try and shoot, let's say we're only right 50% of the time. All right, well, let's just do the math. So let's say we'll do 10 trades. So we know 50%, 5 of the trades are going to go to 0. But the other 5 of the trades are going to go to 15, right? 3 to 1 risk reward. So that means at the end of 10 trades of $1, I now have $15 or 50% return on my money. That's only being right 50% of the time. That's actually being wrong a lot. Half of the time I go on Twitter. Hey, I'm going to buy this and I'm going to sell here and I'm going to take profits here. And it's like literally a coin toss. You might be right, might be wrong. Coin toss. Total random. Could you live with that kind of rate of return? Let's say you did that on an annual basis. Your portfolio goes up 50% on an annual basis. Could you live with those kind of rates of return? It's pretty simple math. And the funny thing is you're only right 50% of the time. So usually this is where actually most people fail in the investment game, is rule number 2. Is let's say they go and they inherit like $5,000 from Uncle Louie. Who just died, right? And they go and they just throw the whole damn thing. $5,000, one big shot, boom, away you go. So the typical retail investor comes in and spend, and this could be Bitcoin, doesn't really matter. They just go and throw the $5,000 in, and then they're just like, oh my God, I'm up 5%. Oh, I'm down 10%. I'm up 1%. I'm down 30%. I'm up 15%. And really, there's not a hell of a lot going on. Remember, when we're right, we get paid 300% return on our money relative to the risk that we're taking. So it's so ironic. I see so many people fall into this trap. My account's $5,000. Oh, my account just went to $6,000 because this went up 20%. And yet we're laughing because I don't know whether you see, but on a consistent basis, I double my money, banging out doubles. So, seeing somebody, their account's up 5%, 10%, down 2%, up 3%, all of that. The point here is that that's actually the wrong way to look at the market. That's betting all of your money on one horse. And, especially if it's at maybe a slightly poor trade location, you're actually setting yourself up for disaster. I mean, just out of curiosity, according to our 5% rule, how much money should you actually throw at this trade idea? And this is assuming the out of the box, keep it simple, 5% rule. Of that $5,000, how much should you actually be risking? And the answer is, well, it's $250. So the point is, maybe you put the $5,000 into there, but if it goes against you by $250, you better get the fuck out of there. What I would suggest to keep it really simple for you is just break up that inheritance into 20 little $250 bills. And then that way you can go and put 20 different bets on of $250. And if you buy in reload zones and you follow half decent fundamental criteria and you buy W's and you buy bullish divs and blah, 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 trade setups, and your setup is about even 60 to 70% somewhere in there, then this starts to add up really, really quickly. And you start living this life, which most people in the public, they can't understand that kind of life. So anyway, what do you think? Was that kind of that was Chris? I remember I started off the video going, I haven't got a fucking clue what I'm going to talk about here today. What do you think?
I think you came up with a good amount of material. Hashtag value.
Do you think that was a half decent little tutorial?
Absolutely.
Well, that's cool. Thanks, man. Appreciate that. So, and I hope also too, this dovetails with what you level oneers were working on here today with risk management, because this week was all about rule number 2. And interestingly enough, rule number 2 is actually number 1. It's where most people fail in this game. And then number 2, I would argue you get risk management down correctly and you play the game correctly, and it's actually extremely hard to lose money in this game. Now, there's something that really fries your brain. If you trade setups that are vetted, have decent fundamentals, good-looking technical trade location, internal confirmation from indicators, W's by W's, and then you apply the 5% rule, it's actually difficult to lose money in this game. That's the key to this, is you have to get it to the point where it's actually hard to lose money. Keep in mind, this game of investing is actually really easy to lose a lot of money. So what I just said there is actually revolutionary, evolutionary. But nobody in the public pays attention. It drives you crazy. Okay. Maybe we should, you know what I want to do is I want to pop on over to the Q&A document, and hopefully there just weren't that many questions. Oh no. Oh wow, what a mess. So I'm just reading something. Oh wow! So even the video itself that Grim was doing got cut short. Oh god, what headache! Okay, so somebody did say that there were Steve. Steve, didn't you say you had the Q&A document? Hey, Andre's giving us an awesome shout out there. He says Brian makes it sound really easy, but really the point of the matter here is please understand, everybody, this is like 35 years in the making. 35 years it took me to come up with these 2 rules of investing. So, yeah, I mean, I probably make it sound a lot easier than it is. And probably it's in your best interest, if you are watching this later on, to either A, be like a great Del Moody and just sit yourself in front of YouTube, and hopefully one day we can get these videos just playing 24/7 in Decentraland in a booth there, which I think would be great. What's this, guys? Please tweet on TRI account this episode. I can't see it. A lot of free value today. Oh, did we not tweet this out? That's too bad. I should have done that, shouldn't I? There is there's the tweet, and then I don't know what else I have to do here. I guess I kind of screwed that up today. Yeah, I don't think we put it on Facebook. Anyway, there is the tweet and the YouTube link there for the lounge. Okay, where was I? Hey, look at that. We got a good 70 people over there. Hit that like button. Make sure Google Analytics sees that you guys feel like you're getting good value for your time spent here. Ditya says, Brian, in crypto land, if there is a decent coin you wanted to buy at 78.6 ROZ retracement, but the possibility of BTC dumping exists, what would you suggest to do? Because BTC dump equals all dump. Yeah, I might argue that just like I was sort of talking to you guys about CanSlim and the M, I don't know whether you've taken the education program, but the M in CanSlim starts for friendly market state. So a lot of people in the stock market, they just say, look at, if the S&P 500 looks like this and we're that far away from reload zones, and maybe we're even slipping through moving averages, and maybe you're getting indicator confirmation divergence, stuff like that. My model says that I have to see a bullish market, so I just ought to leave it alone. I hate to say it, but I think that's the same for crypto as well. And more importantly, Aditya, ironically enough, it's not Bitcoin that's the problem here. The problem, and this is what I and if anything, maybe you guys can help me out with the public tweets, because the problem that I see here, and this is usually, I've told you guys, I remember I told you a few months ago this, and somebody please affirm this, but I told you guys a few months ago that whatever it was that was actually going to bring this crypto bull to a grinding halt, the scandals and stuff were already happening. I've seen this repeatedly in my career, that when the bull comes to an end and we start going into correction mode, and the interesting thing about crypto is it's fairly regular. I mean, these 4-year cycles are pretty damn consistent. So when we get to that end of that 4-year cycle and it's all toppy and frothy, gee whiz, here come the scandals. I even have been sort of like asking the community as we go along here. All right, is this it, guys? I wanted to find out whether Danny was still in the penalty box. And when I asked Nick in our weekly crypto video show we did there a little while ago, he was like, man, I don't really see anything has changed. I heard that somebody came out and sort of, and I don't even know. I've probably completely butchered the spelling of all these people and these names and stuff. So please forgive me on that. Solana, I think they tried to sort of right the ship, stabilize things. So those two, I think, and the worst part about it is that these scandals, they were brewing when everybody was all like, fucking, we're all going to get rich buying. Go and buy, 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 buy. This one, to be perfectly honest with you, of like old timer market participant, this here bothers me immensely. Something like a character like Danny. I mean, you gotta love the guy. He's got a great spirit, but you could see there was trouble written all over that, right? Who can Andre? Can you finish this expression? Like seriously, remember this, people. Those whom the gods wish to destroy first make what? And I never saw a better example of a guy who was this. Fucking, yeah, fucking. I mean, and it like the Twitter stream would come on, and all of a sudden, fucking like there'd be like 5,000 people on the Twitter stream, all going, "Oh, Danny, can we suck your penis? You're so fucking awesome." I mean, it was just incredible. I've never seen it. And then all of a sudden, it just poof, gone. Thank you, Moro. Hey, look at that. Nobody on YouTube can answer that. Try and remember that, people. Those whom, and if anything, it's the one major warning that I have to heed. Is if you guys all start putting me on fucking putting me on a pedestal and making me all full of myself, and Brian, you're the man, that's when I have to be most careful that I'm walking into a trap. So all of these, and like the Solana hack, and that kind of that's bit. I mean, what I find fascinating about this space is nothing really seems to be changing here. You go back and look at crypto history, every single cycle peak, there's always these big hacks. The interesting thing is everybody's shitting on centralized exchanges now. I might argue that actually centralized exchanges probably be a lot safer than these DeFi protocols and stuff. And this OpenSea today, I thought was a great example where these people fell for actually an extremely cliche tactic. And frankly speaking, I'm actually surprised that we're still having these phishing attacks and stuff. And I saw the email. It came through because I've got a MetaMask account and I've got OpenSea. In fact, actually, it's really weird with me. I'll just show you this because it's got actually. You know what? Oh, we're running out of time. Got it. I guess it's funny with Chris earlier today. I was like, I don't know what the hell I'm going to talk about with you guys, and here it is. I've been blabbing away for an hour and a half, and I don't even know if I've even said anything. What I will say is this, number 4, this scares me. This really, really scares me because he set an extremely dangerous precedent here. And the worst part about that I find is that the Canadian public, for example, we have a lot of people well, no, that's not exactly what he said, Jordan. I don't think that that's the case. I think he said, look, if you are afraid, if you are jousting with governments, and the whole fucking social media platform funding, the GoFundMe and all that, right? If you are involved in that kind of space and you leave your coins on a centralized exchange, then yeah, I could see these government guys. They have set a really, really dangerous precedent here. And, this might turn into, and it's shocking because before it was sort of like, well, I might get hacked and some sort of, this guy here, he might fuck me over. This guy. That's who I think is responsible for like Danny, Solana, OpenSea. But this is next level shit. This is like totalitarian dictatorship, Big Brother. And again, I'm just sitting here in awe, just going, I can't believe this is my country. This is Canada. What the hell's going on here? This is something that would have been done in Stalinist Russia. This is something that would have been done in Fidel's Cuba. And interestingly enough, I used to poke fun at a guy like Trump because it's pretty easy to poke fun at him. But I'll tell you, the shit that Mr. Trump did, it does not even pale in comparison to what Mr. Trudeau has done here. Yeah, like Dave said here, they've crossed a really, really dangerous line. And what's more shocking about all of this is the guy is a minority government. This is what baffles me about all of this. He's actually touting himself as like I'm a totalitarian dictator. I can do any old damn thing I want. And he has a minority government. He doesn't even have a mandate from the people of Canada. But the people in Canada are so fucking scared right now. And there's no leadership from the other side. So this guy's like, I can do whatever I want. And whatever I want is, well, I'm just going to do whatever the oligarchs want me to do. That's what whatever I want is. All these lockdowns, all this shit, it's all about what do the oligarchs want for this quote unquote great reset. That's what I think is going on here, folks. And it's so sad. So sad. I mean, I'm embarrassed now to say I'm Canadian on the global stage. I'm embarrassed. And, we talked about, risk takers in the marketplace and stuff like that. I mean, if you're sitting there and you got $10 in your pocket, and of course, Mr. Wonderful is making that worth $9, $8, $7, $6, $5. I mean, the value of the currency is collapsing. But if you had like $10 in your pocket, are you going to want to go and take a chance of investing now that Justin can basically just come along and say, nah, you know what? I want that. Thank you very much. This is not supposed to happen in Canada. Fuck. It's brutal. It's absolutely brutal. So like what I said here, and I actually think of all of these things for crypto, this government coming out. I mean, hell, even China didn't even do this. I mean, they go China ban, China ban, China ban. Oh, no, we're just kidding. And that's actually typical Chinese capitalism. Hey, we're going to fuck you. 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 Nah, no, we're not. Psych. That's Chinese capitalism. This is fucking outright theft. Outright theft. That is what this is. And these are dangerous, dangerous precedents that are being set here. Dangerous precedent. We as Canadians, we have to stand up and say, hey, is our society actually a free society? Is a government person? I mean, it would be okay if he took the case to a court and the court had a panel and that said that, okay, well, based on the existing laws, we decide one way or the other. That's almost exactly how it always goes down in the States. Grand jury, front of a judge, federal judge says this, federal judge strikes down that. That's the way a democratic society works. But what he has done here is he has completely just sidestepped all of that. You're right. Canada is not the same country anymore. In one fell swoop, he has completely changed the landscape of this country. We don't live in a free society anymore. Kaboom. Holy fuck. Like I said, guys, and frankly speaking, I'm ready. I am so ready. I just hope it's not going to be a painful death. But I could very easily see I have a concentration camp ticket with my name on it. It's probably being printed now. And look at this. This Russ guys here says, I'm very proud of our Canadians. So I guess there's a lot of people that like what's happening here in Canada. Scares the hell out of me. But we don't live in a free society anymore. That's for sure. You know, it's so funny how like 5, 10 years ago, we used to sit and joke about things like Zimbabwe and Venezuela and stuff. And yet here we are. We're exactly the same. So sad. So sad. So anyway, I guess the point of the matter here is we should have been thinking that, as we were working our way up and fucking, Alan was, jerking us all off and all that kind of stuff. We should have been thinking, okay, what are some of the scandals? What are some of the vulnerabilities that we should be thinking about are probably going to happen that bring an end to this cycle? And try and remember this for the next cycle, guys, because it's so cliche. And the irony of all of this? Here's the irony of all of this. I don't think Bitcoin even gives a rat's ass. Bitcoin's just going to do what it does. So you tell me, how do we get Bitcoin? Because keep in mind, institutions buy reload zones. Institutions buy down markets. Institutions buy value. That's what I'm looking for. So how the hell do we get price that's here? How do we get it down here so we can buy value? This is how you do it. Boom. 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 You know the irony of it all? And this is the worst part about capitalism. Is I might argue that a lot of this has actually been pre-planned. I mean, not necessarily by Danny, but I wouldn't be surprised if something like a Goldman Sachs operator, keep in mind, these guys are fucking richer than shit. Could they manipulate this market around here and print exactly what they want to see on the price chart? Abso-fucking-lutely. Well, but see, Russ, you don't understand my story then. And frankly speaking, that's a little irresponsible of you. Maybe learn my story and you'll understand why I can't. Going back to our story here. So we all know that rational analysis will probably suggest that you can buy Bitcoins back when we get close to cost of production, when we get close to the next halvening window. Another great image I like to share with people. You want to make this investing in Bitcoin really, really easy? There's the cycle. This is when I first got involved in the space. You can see the duration of how long it takes for the cycle to unwind. You can see how long the bottoming process is. You can actually see the bottom, 78.6 is a previous range. Then you see the reload zone trade. I talked about that as the mountain man trade, buying opportunity of a lifetime, blah, blah, blah. That's what the bottoms look like. Well, I don't believe you, Brian. Well, let's go to the next bottom. It's the same damn shit. All right, so there's your cycle peak. There's about a year correction, 1 year crash. There's the bottom, 78.6. There's rally, then pull back against the load, the reload trade. And there's your next rally. Remember this image. All right, it's the same as this image. Oh, you saw it there a second ago. So let's fast forward today. And this I find so cool. Exact same lines, no difference. Right? There's the 1 year correction. There's the bottom. There's the reload zone trade. There's the next halvening window. And this is probably your window where you're going to make a big old fortune being long Bitcoins, which is probably somewhere around this 2024, 2025 window. And all this stuff is kind of irrelevant. So, I would actually say this is actually stunningly simple. there's no reason to do anything here on the buy side. And I might argue that you just wait for all of this to clean up. And the worst part about it is we have like probably about 3 or 4 very good reasons why this 2022, probably the better part of 2023, shouldn't be good time in the market. And actually, this is a great sales pitch for our blog now, because Josh is getting really good at putting this out now. On our overview page, if I'm not mistaken. Yeah, so here is the TRI blog. Man, I love this blog. It's so awesome. Although, I don't know whether that, I guess that heading doesn't work. But if we go here, here is the blog. And actually, this is free access. So it's not even like behind a paywall. So I think this is just great material. So we actually give a lot away for free here, right? So here's one study. This is the decennial study that says, what does a year that end in 2 kind of look like? So there's your average performance. And sadly, I think we're like right about here right now. The Olympics just ended, the genocide games. And I think we got this ahead of us. Oh, God. So that doesn't look so good. Then, things like the January barometer. This is a great little sort of tool that the stock market pros themselves usually price in what to expect for the year. And the interesting thing about this, and this is sort of, I think, what I'm thinking here. Well, actually, Josh did this up. It's got a little bit, I guess that was into the end. Oh, yeah, okay, this makes sense. Okay, so there's your full year. We should get some sort of little seasonal bounce probably into May, June. That wouldn't surprise me. But I think we got a big old thumping. Maybe this is like the hamster virus or whatever. Then theoretically we'll come into elections, and hopefully following the election outcome, we have some sort of resolution of what the world's going to look like in the United States in particular. And I've been lobbying, please, United States, hold on democracy, hold on to capitalism, because it's collapsing everywhere. But here you can see this is a typical election year. What do election year action look like? So same sort of thing. Open image in your tab. So we should expect some sort of trough, July, August kind of time period, then work our way up into the end of the year. Hopefully you're starting to see some repetition here, right? January barometer, decennial report, election year, typical outcomes. And then, add insult to injury. There's a gentleman who lived a couple hundred years ago, and he actually put out this study of when to invest and when to look for markets to outperform and when to look for markets to underperform. And we're heading in. There's 2023. We're like heading right into that event. So interestingly enough, like Bitcoin, for example, 2018 correction. Notice the market came all the way down. All of 2018 was just an absolute shit show. But then notice 2019, actually, that was the bottom. So if you had said, well, I invested in Bitcoin January 1st, 2019, actually, you did fine. So I don't think it's 2023 that's the shit. Well, when we say the shit, we're actually complimenting. I don't think 2023 is the bad, right? The crappy. I think that's actually the trough. So, but 2022, this year, 2022, I think this is the window that they just basically bring this thing right back down into reload zones, exactly like they did here and exactly like they did here. I mean, the irony of this all is, guys, this is stunningly cliche. Why would we expect anything different? It's so remarkably cliche. So anyway, all right, blah, 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 blah. Hope you guys got some value out of all that. Put it all together, 2022. And then, of course, we showed you the stock market picture. It looks like a train wreck. And then I suppose the last sort of piece to all this is why. Now, crypto, I think we understand the 4-year sort of dev cycles. So I don't think that's too outlandish, especially after a halving event. This is sort of reset button. Once the halving event has been done, then it's sort of like clear sailing ahead. So there's our next halving event right over there. Clear sailing here until we get through there. Bleh, there ain't nothing to really get excited about. But the question is, other than the fact that this is, crypto cycled, but why? Why is this happening? And I might actually make the argument this has everything to do with the cost of money right now. So FedSpread. This is basically the corporate interest rate market is what I think actually drives all this. And then the corporate interest rate market drives the Fed policy. Fed has to act at some point. Point here is this sort of blue highlight is the TED spread. Now we have to call it the Fed spread because the TED doesn't exist anymore because the U.S. government's technically bankrupt. There's the corporate interest rate market all the way down there. And if anything, it's ticking up a little bit, probably because of the COVID shit going on in Asia. But where are we here? Oh, actually, I kind of screwed this up. Yeah, there's probably the one we want. So I would make the argument that the Fed has to play catch up now. Actually, these don't look right. Something's not right about this. Oh, I see. Okay, so this is this is actually February contract, and then this is the next contract out month. Somebody was asking me, well, how do they price in rate increases? So you can see this is one futures contract to the next futures contract. You can see the difference in price. So anyway, we'll put that away for now. And actually, we're on to March now. So what I wanted to show you was 30-day Fed funds, euro dollars. There's euro dollars. Hey, there we go. Okay. So they're on different scales, I guess. Okay. So okay, now I'm really screwed up. Okay, so GE, that's the euro dollar market. So that's the corporate interest rate market right there. This is the Fed funds rate right there. And the difference between these two is called now I'll call it the Fed spread. It used to be called the TED spread. Point here is that this actually moves in very typical pattern, where you have a period where this is tighter monetary policy, this is looser monetary policy, this is absolute rock bottom monetary policy. But hopefully what you see is that this thing moves in a big sine wave, right? And you go back over time, right? Loose monetary policy, we're absolute bare minimum, rising monetary policy. Hopefully you can see the sine wave. And it just goes back and forth, back and forth. So remember I'd said earlier, why did Bitcoin correct that last cycle? Why did the stock market bottom the way that it did? Ironically enough, there is 2017, there's 2018. So you can see rates were rising, 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 rising. 2018, 2019, all of a sudden rates stopped rising, rates start falling, and oh gee whiz, Bitcoin bottoms, and away it goes. So rates have topped, or I guess bottomed, prices have topped. We're going through a rising cycle here. So I might say that while we're in this kind of environment of rising interest rates, as I said, the Fed doesn't really have much control over this. This is really more a function of what the corporate interest rate markets are doing. And remember, everybody, please, for God's sakes, the Fed is nothing more than a consortium of private corporations. There is nothing public about the Fed. The Fed is basically a cartel, just like OPEC. There is very little difference between the Federal Reserve Board in the United States and OPEC. Very little difference. So please understand that. Anyway, point I would just make here is you can see corporate interest rate market actually rolled over and has been rising for a while now. So as a result, the Fed funds, and you hear them, they're talking, they're going to raise, they're going to raise, well, the plan is, and as we said, you can see in the Fed funds, the March contract, they're already pricing it in, that they're going to raise interest rates down in the States. But most people think that the Fed has control over the short-term interest rate market, but they don't. They actually have to follow the corporate short-term interest rate market. That's the big shh, don't tell anybody secret. And somebody says over there, isn't the FOMC the only government part of the Fed? FOMC just simply stands for Federal Open Market Committee. Nothing to do with the government whatsoever. Nothing. What's bothersome is that, Mr. Wilson signed away, really, you might argue, the value of a US dollar has been collapsing at an exponential rate, literally from that exact day that he signed away the right for the U.S. government to control the currency, and basically signed that over to the banksters. Now, why would the banksters dilute the purchasing power of the currency? In essence, all think of the banksters. What's their business model? They lend money out. The only way that they can lend more money out is there's got to be demand. And people, of course, pay interest on those loans. The more money that they lend out, the more interest they collect. So it's in their best interest to keep lending out more and more and more and more money. And every time they lend out 1 penny, and keep in mind, these loans are in the millions, tens of millions, hundreds of millions, billions, trillions probably. But every time they lend out a penny, they are increasing the money supply. You increase the money supply, it's just like crypto. Why do you think people like Bitcoins? They like Bitcoins because it has a very strict monetary policy. You are not allowed to increase the supply of Bitcoins. That's why people like Bitcoin. You go and dilute the amount of US dollars, i.e., increase the money supply. The banksters will say, oh, but look at the economy. The economy is growing. Oh, we're getting bigger and bigger. No, you're not. All you're doing is just lending out more money. And ironically enough, what ends up ultimately happening, if you don't have an increase in productivity from the slaves, you actually get inflation, i.e., the purchasing power of the underlying currency falls at an exact same rate as the issuance of those extra dollars. And you want an excellent illustration of this? You go and look at all the tweets. Can somebody find me the tweet? Well, there's a guy who put a lot of work into it. What happened in 1971? And you look at the purchasing power of currency. That was when the Americans officially left the gold standard. I would argue that they left the gold standard much earlier, but they just publicly made it aware that they did that then. And you look at the purchasing power of our dollars since 1971. I mean, it's comical how they've just collapsed. So, but the banksters don't give a shit because their salaries are indexed to quote unquote inflation. Inflation is nothing more than the banker's tax. So in essence, the bankers have said, look, you pay me a salary, but it has to include the banker's tax. That's how you have, I mean, when I was a kid, a guy who had $100,000 a year income, fuck, he was the man. And $100,000 a year, that's fucking peanuts these days. It's enough to make you cry, really. So anyway, So I would just make the argument that the money cycle here, the Fed has no choice. It has to be raising interest rates. The question ultimately is going to be how far does it go? And this, unfortunately, is where this sort of great reset conversation comes in. Because now the banksters, and keep in mind, it's all a con. They have to increase the size of the economy so that the existing bonds that they all issued don't overwhelm the economy, i.e., you can't have the debt size the same size as GDP. In fact, there was a Fed governor a while ago came out and said that once you hit 130% GDP to debt, it's over. And sure enough, as soon as the Americans hit that number, this new world, this quote unquote, and it's fascinating how this sickness just so happened to coincide with all of this. Coincidence? I wonder. But in essence, the Great Reset is nothing more than we have to issue a ton more of this currency, grow the economy, but you're not really growing the economy. And that's the whole conversation of this image, right? Keep in mind, this stock, right, the Dow Jones Industrial Average, they don't give a shit about the underlying value of the currency. If one share of IBM is worth one share of IBM based on things like PE ratios, based on price to cash, based on the amount of debt that they have, whatever. So some analysts has figured out what the value is. If the central planners, central bankers go and issue a whole shitload new currency and inflate the economy, well, the Dow Jones IBM stock, it's going to go up because it's like, well, IBM stock hasn't changed in value. What has changed? Well, the amount of these silly dollars in the system. In reality, if you take out the dilution of the currency, you can see the economy hasn't done anything here. Okay, I actually have to wind this up here pretty soon, so we never even did get to today's questions. What a doofus. I hope you guys enjoyed that rant. It sure was fun, wasn't it? So I think we'll probably have to leave it at that. I never did get the link to the Q&A document. Oh, Chris did give it. Let's see. All right, you know what I'll try and do? Oh, didn't that work? Open a new tab. There we go. What I'll try and do is, oh, it turns out I did have it open. What a knucklehead. All right. Where are we? Let's see if we can do this. I can't really, I got to get out of here. I really should get going. So what day is it today? Today is the 20th. Ooh, I move in exactly 2 weeks time. I'm so excited. All right. So where is the 20th? Left off here. Oh, goodness. And I spend a whole bunch of time. I hope the person who asked this question felt as though I gave a good answer to your question. You put a bit of time and effort into your question, and I remember I did come back and I answered that. I hope you feel as though this helps you a bit. And for whatever it's worth, even though the dashboard is not part of your education program, and I don't want to be teaching people on Broiler Chicken Show about the dashboard. The team, actually my latest sort of team of cool dudes, Josh and Chris and I, we got together tomorrow, and we'll do this on weekends. They're kind of like, Brian, we really need this. We really need the and actually that's not even the right title, this breadth tutorial. We need this done. So this is what I'm going to be working on through the week, is to get this nice and polished for you. But anyway, so that's in the works. And like I said here, it's not ready when you ask the question, but it will be down the road. So, okay, yeah, we talked about that. I remember we talked about the yield curve. So 20th, is that today? 20th. Okay, so my goal is to have one of my accounts pay me dividends for life. Well, that'd be nice. That will cover my monthly living expenses. I'm married, in my 30s, income meets living costs, and have no debt. Okay, well, that's cool. What would you generally advise me in this case? Invest X% in stocks and X% in bonds. Buy put options once per year to protect my portfolio until I die. Well, it's not a bad idea. Sounds to me like you got a pretty good plan. This is sort of like along that efficient frontier kind of thinking. But you want to keep it really, really simple. You're going to just allocate a certain amount to the stock market of your portfolio, a certain amount to the bond market. And I would also include cash in there. You should probably have a big chunk of cash. And frankly speaking, you should probably have like 5% in gold. That's what typical portfolio managers do. And then, if all hell breaks loose and gold fucking goes to the roof or through the roof, well, you got that 5% of gold on the books. A lot of people have been buying Bitcoin as their sort of risk off, inflation hedge proxy. I'm a little bit leery, but interestingly enough, gold prices are getting bid up now. Like for the longest time, like if you went average cost of production in gold industry, typically, if you looked at this, the numbers would come in. I'm not quite sure what this is. Gold mine production. Do we have a actual cost of production? No, this is just fluff. Oh, what do we got here? Production cost. There we go. So you can see Q3 2021. So that's like it's pretty recent, in the last 6 months. You can see $1,200 US an ounce. And frankly speaking, that seems a little bit high, but nonetheless, 1,200 US. So with the current gold price, just do it here. $1,200. Right now, we're sitting at $1,900. That's only about a 50% premium over cost of production, right? How about Bitcoin? Is Bitcoin trading at a 50% premium to the cost of production? At $39,000. What did we say Hut Mining's cost of production was? Anyone? It's not $39,000. It's like 1/10 that price. So, ironically enough, in this kind of environment, I would say I love the idea of Bitcoin as an inflation hedge, and it's sort of a, careful, keep your money nice and safe, and try and avoid this fucking great reset nonsense bullshit. But the problem is that Bitcoin's trading at a huge premium to what it costs to actually produce a Bitcoin. So that's where it gets a little bit bothersome. I can't look at this as an inflation hedge, buying it at $30,000, $40,000. It's not logical. We get the price back down to like 5, 10 G's. Okay, well, we can start talking then. So in a weird sort of way, I don't actually mind the gold trade right now. In actual fact, it's kind of sad, but hopefully all of you guys can see there is and I actually think I walked you through this on the stock market earlier. Do you see the trend continuation trade that's developing here on the gold market? And if the cost of production is $1,200, we'll say roughly, then what this is saying, this target up here at $2,700, is that's like if Bitcoin's cost of production is 5,000. Well, let's be generous. Bitcoin's cost of production is 10,000. Then that's the same as this thing, 1,200, trading at 2,000-3,000, right? That's 3 times cost of production. So Bitcoin right now is cost of production is 10,000, which of course is way, way, way high. Then the current price could be 30,000, and that would equate to the same logic. So in a weird sort of way, it's not really that I love gold, and frankly speaking, I think here's the tragedy of gold is that if you actually look at gold on a relative basis, this has been an absolutely horrific investment. Where is that? Maybe it's over here. Hey, there we go. So you tell me, in real dollar terms, has it been a good investment to be long gold? I mean, hell, this is if you bought your gold in 2016, how you doing? I mean, you're still just basically flat. So that's so sad, eh? So, I might argue that if gold actually did what the gold bugs actually would expect it to do. And believe it or not, we could actually see gold price all the way up here. I mean, this could be the problem here, though, is the powers that be. I think that they know that if gold price does go up to here, then that might just bang. What does that mean? Is that like $1,000 for a loaf of bread? Could be. So I don't think they want to allow something like that to happen. But ironically enough, if it did, then that would probably be like, okay, the whole silly currency system is reset. Now at least these currencies are trading at value. So I don't know what's going to happen in the gold market. I don't know whether that kind of scenario plays out, but I definitely could see, as I showed you there a moment ago, I definitely could see this scenario. 2,700 bucks an ounce easily. It almost looks like it's a foregone conclusion now, which is so scary. Which is too bad because, I mean, really, this is just purely a function of the value of our underlying currency is just collapsing. It's not really like gold's value is getting any better. But oh well, what can you do? Okay, let's see. So I might include a little bit of gold or some sort of commodity, maybe even like an index to inflation note or something. A little bit of cash in there too. So, nice efficient frontier, nice balanced portfolio. Is there anything else better than dividends to cover my expenses? The interesting thing here is dividend stocks actually are considered value names. So companies that pay high dividends, they're constantly increasing their dividends, they fall under the value spectrum. They're more conservative. So we're actually heading into a growth cycle here. So ironically enough, what that means is dividend stocks themselves should actually underperform. That what you'll actually see perform going forward is growth stocks. And we should get, in by 2035 or so, we should get to the point where people are like, no, growth is the shit. Don't buy value. Grow, 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 grow. So right now, everything's value, 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 value coming out of the baby boomer fear cycle. And the millennials are just starting their growth cycle. They usually hit the millennials will hit their peak earnings years in about 15 years. And when they've hit that, the market will be booming. So, and interestingly enough, if you look at the ratio of how much American households own equity versus not, they are very, very low on the equity equation now, which makes sense. Through the fear cycle, the baby boomers should have been getting out of equity, which is stock, and investing in bonds and commodities. And you see how all those are acting. I mean, bonds did very, very well. Commodities, they did okay. The only problem is we had all this currency dilution, which kind of screwed the picture up. So it's kind of hard to actually see the real picture in these markets. But anyway, the point that I would just make is you are leaving out the growth side of this equation. And I might argue that you think efficient frontier, you probably want to have a big growth proxy in there. If anything, I would almost balance it 50% growth, 50% dividend paying stocks. So, that's sort of your overall mix. Then what I would prefer you do is you're going to create a universe of value names, high dividend payings, things like WDBs. You're going to create a universe of things like CAN-SLIMs and VCIMs and GARPs. And you're going to start applying all the technical analysis tools that you will learn in the candy store to help you time the purchases of your screen names in your various universes. So I hope that helps. answer that question. I don't know. Maybe it did. Maybe it didn't. Okay, I don't want to leave Liam too late here. So great to see so many questions. Probably the best thing to do is for us to maybe spend a lot of time in tomorrow's daily brief after Sjord has done his presentation, just answering questions. So why don't we leave it at that? I have to go get pretty for the boy. Hope you guys enjoyed the rant. A bit of an odd tangent. We'll see how many people watch the video through the week. Hopefully it felt like you got some good value. Only really addressed one student question. Like I said, we'll attack that in earnest tomorrow and Tuesday and later on in the week. Didn't even really talk about the engine today, but I think I started off the conversation with you guys saying, this market looks like poop right now. So there ain't no hurry to do anything. If the S&P 500 looks like this, just leave it alone. There's no, if you want to go hunting shorts, all right, awesome. But on balance, most people play the market long and they're invested in their 401ks and their RSPs and all that kind of stuff. So if that's the case, just leave this shit alone. If you are a crypto fan, it's really simple now, folks. You just got to wait for some W's. Who knows how long it's going to take? Where our next juicy buy signal will be when slow gets down into the oversold zone. It works really, really well. So, my suggestion would be just sign up for this, wait for this thing to start spitting out W's, and then you can start going shopping again. But until then, just cool your jets. So have yourselves a great rest of your day. PMA for the win. Wish me luck with Liam. And I see you guys already are wishing me luck with Liam. I tell you, when I ask you guys to do that, he's generally in pretty good spirits. So knock on wood. If my broker buddy behind me calls you up, just remember he's renewing his notary license on a weekly basis. Try and have a lighthearted approach to all this. Let's all just try and work together, try to make this world a little bit better place. Great part about what we teach is it's not rocket science. It just takes a lot of patience and discipline. Consider joining the school program if you want a very well constructed, very well organized, very well methodical step by step to get you from I'm a noob, I haven't got a fucking clue what I'm doing, to hey, I'm a pro and I could actually even realistically go and get funded at prop firms and become a professional trader. We actually do that for people here. Trust me. Actually having the ability to go to a prop firm and you don't know any of these people and walk in there with full confidence and say, all right, I'm here to get funded. Give me my sort of test and I'll jump through your hoops. Let's go. If you actually are at that stage, then I have won. I've done my job. I can rest in peace. So I'm very immensely proud of this community. This is actually the shit, folks. And now with Sjord's magic machine, it's actually really easy. It's really, really easy to play this game. But the number one thing you got to learn, patience and discipline. Okay, folks, I think we'll leave it at that. Have yourselves a fantastic rest of your day. Hugs and kisses from Liam. PMA for the win. All the best. And the only thing left for Brian to say at this point is a big bye.